Hello, and welcome to this week S&P 500 Market Pulse. I am your host, MD Kollol Hussein, and we are breaking down the key market movements, sector performance, top stock winners and losers, and crucial economic indicators for the trading week of July 13 to July 17, 2026. It was a week of consolidation and profit taking. The S&P 500 close to at 7457.69, reflecting a decline of 170.70 points or 1.55% negative. The index opened at 7575.39 and we saw a tug of war between buyers and sellers throughout the week, ultimately ending with cautious sentiment. Let's dive into the daily breakdown to see how this unfolds. Here's how the week shaped up day by day. Starting from the previous Friday, July 10th, the index closed at 7,575.39. On Monday, July 13th, we saw a notable drop of 0.79%, closing at 7515.34. Tuesday brought a modest rebound with a 0.38% gain, closing at 7543.59. Wednesday continued the recovery with another 0.38%, pushing the index close to the starting point at 7,572.40. However, that momentum faded on Thursday with a 0.51% move down, closing at 7533.77. The selling accelerated on Friday, July 17th. We saw the biggest drop of the week at 1.01%, bringing the index down to its final close of 7,457.69. This pattern suggests that while there were buyers stepping in midweek, the sellers ultimately prevailed, indicating a defensive tone in the market. Sector performance and winners. So we see here sector gainers. What we are see here, leading the pack was real estate, which gained plus 1.5%, 5%. Energy followed closely, up 1.20%. Consumer staples, a classic defensive play, was up plus 0.66%. Financial and materials also saw modest gains of plus 0.65% and 0.40% respectively. However, the losses were concentrated and severe in few key areas. Information technology was the clear laggard, plumbing by 3.63%. This was the week's primary drag on the index. Utilities also fell down 1.27%. Communication services and healthcare saw a smaller decline of 0.57% and 0.4%. This is the classic defensive rotation. Investor moved away from the high growth tech sector and into safer havens like real estate and consumer staples. Consumer staples. Let's move to the top gainer and loser. Information technology. We see here, despite the overall market decline, there were some notable studies where here the top 10 gainers for the week, with the average gain among them at a very strong 8.91%. Taking on the top spot is PayPal Holdings, which surged an incredibly 18.70%. Second was Cintas Corporation, a leader in corporate uniforms and supplies, up 11.27%. In third is healthcare giant Abbott Laboratories, gaining 9.30%. Tech was not completely out of favor as Palo Alto Networks PANW climbed 8.59%. Cybersecurity firm CRWD also jumped 8.07%. The travelers companies TRV in the financial sector gained 8.04%. Phillips Morris International PM rose plus 7.10%. Discount retailers Rosdos was up 6.38%. CHRW, a logistic company, gained 6.11%. And finally, Beatrice, a pharmaceutical company, rounded out the top 10 with a plus 5.49 gain. The presence of financial healthcare and select tech names shows that investors are very selective regarding specific earnings, catalyst, and value players. Top 10 weekly loser, we can see here. On the flip side, it is a brutal week for several stocks, particularly in the technology sector, which accounted for 8 of the 10 spots. Average loss among those top losers was a staggering 16.35%. The worst performing by far was IBM, which collapsed by 26.72% this week. Next was Sandix Corporation, falling 19.07%. PNR dropped 18.40%. CN declined 15.95%. GLW Corning Incorporated lost 15.56%. ISRG fell 15.16%. WDC Western Digital was down 14.10%. Marvel Technology fell 13.26%. CDNS, a software company, declined 12.65%. Supermicro SMCI was down 12.58%. The significant losses in companies like IBM, SanDisk, and Intuitive Surgical suggest sector-specific headwinds and or disappointing earnings reports are weighing heavily on investor sentiment within the tech space. Now, P ratio analysis. We see here this graph. P ratios here. Beyond price action, let's examine valuation trading activity. This week's P analysis shows a massive divergence in market valuation. On the high end, Intel leads with a sky-high PE ratio of 675.6 times, followed by Microchip Technology MCHP at 450.4 times and Plenty Technology PLTR at 416.2 times. This reflects a strong future growth expectation priced into these stocks. Conversely, value opportunity exists in the communication services sector with CMCSA Comcast sporting a very low PE of just 4.75 times and Charter Communication CSTR at 5.5 times. Now looking at where the institutional money is flowing, the turnover leaders show immediate liquidity. So we are going to turnover leaders. Here, Micron Technology dominated with a staggering turnover of over 21.3 trillion. Nvidia followed with over 13 trillion. Zendex, Apple, and Advanced Micro Devices AMD also saw massive trading volumes. This intensive activity, particularly in the technology sector, signals a major institutional repositioning that often precedes significant volatility. Key takeaways, and economic indicators. So what are the key takeaways for investors this week? So before that, weekly performance snapshot I am showing here. S&P 500 weekly return down 1.55 percentage. S&P 500 opening 7575.39 and closing at 7,457.69. Top gainer PayPal 18.70 percentage. Top loser IBM 26.72 percentage. Best sector real estate gain 1.5374 percentage. Worst sector information technology 3.6328 percentage down. Top turnover MU 21,315.70 billion. Combined turnover top 91.8 trillion. Highest stock P INTC 675.6 times and lowest P stock CMCSA 4.7 times. So, we are in a corrective phase. This market is experiencing profit taking and valuation adjustment. A defensive posture is advisable. Sector rotation is clear. Money is moving out of expensive tech stocks and into defensive sectors like real estate and staples. Was the turnover? The exceptionally liquidity in stocks like Micron Technologies offers opportunity but also signal potential volatility. Use this is an entry or exit indicator. Valuation divergence. The extreme spread between high growth and value stocks suggests a prudent strategy is to balance your portfolio, blending growth stocks like Intel with value opportunities like Comcast. Finally, let's look at the broader economic picture according to the latest Federal Reserve indicator. Here we can see here the federal fund rates remains at 3.63 percentage. The consumer price index stands at 332.57 with core CPI at 336.06, showing persistent inflationary pressures. The unemployment rate is at 4.20 percentage. The 10-year treasury yield is at 4.57 percentage. These indicators suggest an economy that is still navigating inflation and interest rate expectation, which will continue to be a key driver for market sentiment going forward. That wraps up our weekly market pulse for the S&P 500. Thank you for watching. Please like, subscribe, and hit the bell icon for more weekly market insights. And remember, this analysis is for information purposes only. Always do your own research. We will see you the next week. Thank you.